take into consideration that information in this session may not be suitable for everyone. If you want to get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. A risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion, my analysis, and not MK official opinion. So Forex is a risky business, and this should be not taken as advice. It's a personal opinion. And this webinar is for informational and educational purposes only. You know that Admiral Markets Supreme Edition, another way to trade more efficiently. Trader Room, download it from there. Try Web Trader. And one more thing that is great, guys, a great thing for you, especially if you want to start a new account. I have already published a blog there because I really like those bonuses. At least you can try to trade it. Not necessarily I say that you will manage to get all the bonus up, but try it. It's good because it expands your margin. There are a lot of different things with deposit bonuses. So you can get your bonus here. Okay, just claim it. It's not that hard. Okay, and to be honest, guys, here you can calculate it easily. You can see it how it's done. Also, good thing is I will be sharing next Sunday a free strategy for deposit bonus trading. So that will be my own strategy that I have developed. So stay tuned. Of course, it will be published on Admiral Markets blog, where you can see our blogs published each week. Okay. Sorin is saying, hi, sir. Many thanks for last week. Well, you're welcome. I'm glad that you made pips. Before we begin with the previous session results, today, for all newcomers and for all people who are still not sure what we are doing here, what we have been doing here, so we need to give price a breathing room before we enter the market. I recommend entering within 5 to 15 pips of the probability level if it's in agreement with your system. Sometimes the price might just be closed. So this is the zone, 5 to 15 pips. But if you see that the price, so let's say that the zone is 15 pips overall. If the price gets 2 or 3 pips close to the zone, well, opt for possible entry, because don't wait for if you're going with market orders, you don't need to wait for exact zone. Okay, sometimes 1 or 2 pips shy, well, it can happen. And a couple of times during last week and previous week, basically we had good setups that were rejected just 2 or 3 pips shy from the zone. Well, you know, I hate when it happens, but I hate it when I had pending order. If I'm doing market orders, then I don't care really. I always go with a risk, you know, because when you opt for entry, you need to know what will be your overall risk. I have my recommended risk, and I tell you what I suggest. But sometimes I know a lot of people just definitely don't want to heed my advices, and they're so sure about trading, and they go with 5-10% of a risk per trade. Well, I don't necessarily say you don't do it, but I don't recommend it, because in the long run, guys, in the long run, you will be profitable if you go with lower risk, because you never know when market can turn against you, right? I know we can opt for a little bit more of a risk, let's say 1.5%, but you need to be so sure in that, because overall, guys, you can go with, I usually go with in between 20, 25 and 80 pips per trade. Let's say about our session recaps. So it's okay, right? Today, I'm not sure that you saw my video. I did EQ Maremat, that is EQ version 2 EQ Maremat trading. And actually, I made a live video, pound dollar plus 52 pips. Let's say that, well, very often you will see that the trade gives you 50 pips. If you're happy with 50 pips, protect your trade for, let's say, 47 pips, 45 pips, and enjoy the ride. Because you never know when will you get additional momentum that can maybe spike your pip ratio from 50 to, let's say, 70, 80. Use scaling in, okay, if you are opting for that. Yes, Nathan is saying you can use trailing stop with SAR. Yes, I use profit stop, Nathan, more than indicator trailing stop, because I don't know, I might be a bit of a price action trader, you know. I like to do it manually. I like MACD. I love Murray Math, AQ pivot points, Cameroon MACD. Those are mostly pivot points, right? But when I opt for indicator, somehow I really, I don't know, I believe in myself more maybe than the indicators. Except when it's for MACD that well, MACD is almost perfect indicator. So what I can say, yes, you can go with SAR, PSR, right? But the thing is, well, guys, if you go with a traditional way, how I teach you, you can always use levels of support resistance for placing trailing stop. Yes. And we will be having a lot of price action training school sessions, and when we finish with price action training school, that should happen probably around September, then we will start to trade. Actually, there will be one more webinar. Well, probably that will be a Wednesday webinar when we will do maybe one more setup for trading and questions and answers, whatever. So let's see. Of course, session recap. As long as I'm able to hold it, you will always have session recaps, guys. Respect your stop loss, okay? Respect your stop loss. Your stop loss is your risk, okay? You don't want to go over your risk, right? If you don't have a stop loss, then pray that trade reverses and you go in profit. And I intentionally say pray. Well, is it okay? Many times I've encountered traders who were trading very, very good, but the problem is they didn't use stop loss. And after 1 or 2 years, their whole profits may be gone because they just don't know where to put it. Once you're accustomed to your stop loss, you will be cool if your stop loss is hit because you know that your account is safe. Add a spread. If you're trading with ECN, simple, add 2 or 3 pips more, 2 to 5 pips, just to secure the possible small stop grab below the stop loss. Because my stops are usually pre-calculated, and you know, those stops are also levels where price reacts. So if it's a strong stop, then some orders might be above or lower, few pips. So, and then instead of hitting to the pip, you might protect yourself by adding 2 to 5 pips, and the price might reverse in your direction. We take one position from each trade, whichever hits first, because first touches of the zones levels are most profitable, guys. I have learned it many times during my trading career. Okay, because you know the thing is, I don't just analyze the price, I also trade it. So I have learned a lot of times that the first touch within the zone is usually the most profitable, because we are aligning now moment buyers and sellers. Watch what I'm speaking. I mean, listen to what I'm speaking carefully. Aligning now moment buyers and seller versus what? Historical, right? Historical buyers and sellers. And buyers in now moment, if you're buying, right, can be very powerful if they're aligned with historical buyers close to the level of the zone. Same is for sellers. Because I always say, the advantage of Forex market over the let's say stocks is that Forex market is always, the price always repeats itself. And that's a good thing. Yes, Nathan, repeatable. Arne, well, about a video, I'm not sure what video you're referring to. So alternative position trades are trend trades, okay, are trend trades. Alternative trades are counter trend opportunities. When you see on the slide position trade, that means that the price will go in trend direction. Alternative trades are trades that are counter trend. Breakout trades and scalp trade levels are done independently. It can be a second entry. So if you see breakout, you can do it as a second entry, always, because it's different. Positional trading is different compared to breakout trading, and scalp trading is different to positional trading, but similar to breakout trading. Because breakout trades, if they're done like trigger happy trades, they're mostly scalp breakout trades. And we will learn about trigger happy, breakout, retest, breakout, pullback, continuation, breakout, pullback, retest, continuation. There are a lot of different types. We will do that in price action trading school. So, well, just a second, I have a question. Okay. Depending on time and volatility, usage of trailing stop is highly recommended, usually after 20 pips of profit. So what it means is we never ever take less than 20 pips of profit. Never ever. I don't care. I don't take 5 pips for these setups. These setups are 1 hour, 4 hour setups. I never ever take below 20 pips. Really. So what I think is, mostly last testing, when I compare my results to this session recap trades, usually it's like margin has expanded. So I might change this. So usually after 25 or maybe 30 pips, but I might change that in future, because mostly price goes at least 25 or 30 pips, then sometimes it changes, not always. But you need to do it yourself. Whether you will opt for, guys, you need to manage your trade. You can opt for closing trade partially and then putting the rest to break even. It's called scaling out. You can also close overall trade for a full profit. You can put a profit stop. Let's say price goes 30 pips on profit, you can put a profit stop to plus 20 pips. So it's up to you how you will manage the trade. These are the analysis pre-fact. So, you know, trades can happen instantly during the webinar, or they can happen during next 3 days. So these setups are valid for today, tomorrow, and sometimes the day after tomorrow. If there is strong news, we don't trade. If market is waiting for FOMC or Mr. Draghi speaking, we don't trade. Okay? You might go for a scalp, whatever, but I never ever will recommend a positional trade if the chief or chief of Fed, of ECB or Bank of Japan or people are talking. Important people are important. Important for both you, for both economy, and both for our recap trades. Because we won't be going and we won't be trading during Chief Draghi speech or Miss Yellen conference. Why would we do that? We cannot move the market, guys, when there is huge volatility, mostly done by huge banks, investors. Equities are also moving the markets. I've been doing a research with my friend who actually was a Citibank trader, and we've been doing extensive research on dollar yen versus Nikkei. I'm not sure that I might do a blog on that also, or make a special webinar, because dollar yen is excellent follower of Nikkei index. And I love equities, really. I didn't, like let's say 2 or 3 years ago, I didn't pay that much attention to equities. but well, it's very powerful, very, very powerful for some pairs, mostly for yen pairs. I like AUD yen and dollar yen. Arne, okay. Sure. Arne, no problems. You can search. Arne wants to see the video of my live trading. Well, basically, Arne, it's just for showing how it's done. I didn't show anything else. So you can search for my tweets today and you will see it. Dinesh, good question. Why the pound is upward when fundamental is bearish? Yes, Dinesh, pound is bearish indeed. But the thing is, it's mostly ranging. I will show you that. I plan to do that. Okay. Scalp trades should be done at or very close to important support resistance levels. All scalp trades are calculated by historical levels and Camarilla. Add these levels to your system. Pay attention to Twitter updates and the term that we use, pips pool. That is the maximum available number of pips you could have got on recap entries. So this is pip pool for all these pairs. Euro dollar 120 possible pips, pound dollar 40, Australian dollar 50, dollar CAD 30, and also guys, when you're trading, if you trade dollar CAD, always pay attention to oil price, because dollar CAD will go down if oil goes up. That's because oil is heavily connected to Canadian dollar, and if oil is strengthening, Canadian dollar will also strengthen, and that will get stronger, and that will move dollar CAD to the downside, because dollar falls, CAD rises, dollar CAD down. If oil goes down, dollar CAD will go up. Dollar goes up, CAD goes down, right? So there is correlation between oil and dollar CAD. Euro GBP, target price was hit, but it didn't qualify for an entry because it was higher from our POC. But as I always say, guys, even though if you don't get an entry, try to pay attention for price action, because price action might go in the direction of the trend. Euro GBP was very bullish, and I told you it was bullish. Now, we didn't get an entry, but you will see target price was hit and even overshot. Well, try to use other entries. If you see that it really goes strong to the upside, you might at least do some scalp trades. Total pips pool for the previous week, plus 240, trade of the week, euro dollar, guys. And this was the trade of the week. Now, of course, I'm not saying that you should get all 120 pips, but you could at least wait some, like, I don't know, 30, 50, 60 pips, because you can see here, it was the entry. The price never goes straight to TP, right? You need to decide how you will manage your trade. So this was the entry, this was target, and I think I did the analysis for the euro dollar today. It still looks like it's a bullish, it's a range, but it looks bullish, so it might break out to the upside. So this was previous setup, and you can see it was pretty much successful. We got an entry here, and the price went to the upside, so it was a good one. Pound dollar, well, pound dollar was initially good, but then it reversed. I said buy at 41.30, and the maximum number of pips you could have made is 40 here. See, the price hit our, well, it went up, but it didn't go, it made a double top here, and it went down. You see double top here. So whenever you see a double top, be wary about the price, really. Australian dollar, another one, hit target price, very good trade setup. I said buy position at 75.70. The price went to 75.68. Well, basically that's it. And then hit the first price, the target at 76.20. It's like 50 pips. It went a bit more to the upside. And this was also a good trade. I really liked it. Dollar CAD, I always say, well, I didn't, maybe in the previous webinars, I didn't tell you that you should pay attention to oil, but now I'm telling you guys, pay attention to oil price always when you trade dollar CAD or any other CAD pair. Nathan is saying, do you use alerts to notify about price approaching target? No, I'm too busy, very, very busy, guys. Need to prepare a lot of things for the day, so I'm not able to give alerts really. So try to manage yourself. The best I can do is to give you clear analysis, answer your question, put a zone, put a potential target, put a potential stop loss, and I think it's more than enough. Really to take a lot more time to do that, and it's impossible. Dollar CAD. You mean for myself? You know, Nathan, because I'm very close to my trading platform, I have it open almost all the time. So I don't specifically use alerts about price approaching target. What I do is I use alerts if, let's say, the price is close to my, I don't know, trend line or POC zone, just to pay attention that I can make an entry. And I'm just paying attention to price. I always have pairs that I trade, let's say, on my chart. So whenever I do something else, I take a look at other monitor and I see where the price is. I also see the levels, the zones, whatever. And if I see that I'm 50 pips, you know, for let's say 50 pips, just for example, in a profit, well, I usually secure the pips. And if I see that the price is going nowhere, I might close it sometimes. For these setups, I never go below 20. But if I see that the price is going nowhere, then, well, I leave it sometimes overnight, or I might opt for a scale out and putting my stop loss to break even. And, you know, if you trade with a low risk, it doesn't matter. If your stop loss is hit, well, it won't be much, right? Well, I'm guessing that you already know it. So the only alerts I use is actually trend line alerts, and if basically it's the zone, right? If I set up a trend line that is like POC zone, and if the price gets in the zone, I prefer market orders more than those pending orders. But sometimes even for pending orders, I might do it, but I then really need to be monitoring it, or I put expert advisor that can manage my trade with the rules I previously set up. Because if I sleep, I cannot manage a trade. I need to leave a trailing stop expert advisor. Euro GBP, you see what happened with Euro GBP? Well, this is the old slide. I'm not sure why I posted the old slide. This was done by mistake. Well, what happened with Euro GBP, I will tell you. This was the old slide. The price was, now I don't have it anymore, so I cannot show it, unfortunately. Or maybe I have it. Just give me a second. I thought I had it somewhere, but it was probably overwritten. Here it is. Great. I found it. This was GBP, guys. What happened is I gave you buy position at 79.40. Well, you see, this was the webinar time, right? The price didn't pull back much. It was just a meaningless pullback after the webinar. See? And it proceeded up, hitting all stops, all targets, whatever. It went highly to the upside. So whenever you see these guys, I think euro dollar and euro GBP have a positive correlation. So if you are in profit with euro dollar and the price is still going up strongly, you can try to make also trade on euro GBP. Just try with your own systems, whatever, try to do some scalp trades. Because you see here, it was very unfortunate that we didn't have a POC entry, but still it was a good prediction, right? After prediction, you always need to react. So a prediction before reaction, and I always said react, don't predict. But in the case of analysis, you need to predict, and based on your position, on your prediction, you react. And now, market plan for euro dollar, of course, For me, buy position 113.70, stop loss 13.20, target 14.50, target 2 14.75, target 3 15.20. If we have a breakout at 14.70, target will be 15.26, stop loss below last high, H1 low. Okay. Alternative sell 15.25, stop loss 15.60, target price 14.70. If we get a price before we make a, I don't know, buy entry, or if you have a successful breakout, well, the price could possibly reject from 15.25. Have in mind this will be, in that case, counter trend trade opportunity. So, well, you should watch not just target, but you should watch the price carefully how it behaves. Okay. Now the chart goes here. Okay, here the chart. Euro dollar, well, I think I could use the help from my analysis today, because it's the same as I made before a session recap. So the same analysis I did today. Here, guys. So you can see here clearly ranging price. Now a trader asked me today, how can we distinguish between a possible range? Is there an indicator that can tell us whether the price is trending or ranging? Guys, there is no indicator for ranging and then trending market. I mean, some people use indicators because they made something like algorithms from different indicators such as CCI, MACD, moving average, stochastic. They put it like some sort of calculation, and then suddenly the indicator can tell you if the price is ranging or trending. For me, it's unacceptable. I don't do that, and I don't recommend. Why? You might ask. Simply because, guys, remember the teaching from our price action training school. Okay, remember. And remember now and for always. Trend exists on every single time frame. Trend can exist on monthly time frame down to 1 minute time frame. What is a trend? Trend is trust and pull back. Trust, pull back. This is uptrend now. Here, generally, see? And this was the range. So, as I said, this was a bullish range, as I wrote in the analysis. So, whenever you see zigzag, up retracement, trust and pullback, that is uptrend. Whenever you see price going down retracement, it's downtrend, right? It can be on 1 minute and it can be on monthly. So there is no indicator that can tell you, well, it's a trend. Okay, which trend, guys? If we do it on intraday to intra-week basis, then we do it on 1 hour and 4 hour. If it's a long-term prediction that I don't do, then you should do it on weekly or monthly. If you do it as a scalper, then you just don't care about daily, you don't care about 4 hour, you don't care even about hour trend if you do it on 1 minute. But trend can exist on 1 minute time frame. That's the difference, and that's the beauty. That thing is advantage to you. The thing that you know that trend can exist on every single time frame. So you're trading the time frames. You're aligning the time frames with both price action, trend, and momentum. What William Bloss said, my favorite book, old book, but it was good. Momentum, direction, divergence. Momentum gives you direction, and there is divergence that either retraces or reverses the price. It's not that hard, right? So did you see this? Yes, this looks like uptrend. But look at the EMA here. It was a bit flat. flat, guys. I don't have a PDF, Dines. Maybe you can Google for it if there is a PDF, I don't know. I read it as a PDF, but it was a long time ago, I think. And then I think a friend sent me, yes, I had also a physical copy of the book because a trader friend sent me the book, the original book. So it has its special place. So about PDFs, maybe it exists. I'm not sure. You need to check it. But look at this here. The book is, well, not sure. It was maybe a bit old for you, but I will give you the name. But you might like it. And okay, back to Weber. So this is the book. No worries, Nathan. So look at this. Ranging price action. You see the range? Where is it ranging? It's ranging in between this top and this low. So this low is L4. This top is just a little bit higher than H4, H3, but clearly a range here. The price is going up, down, up, down. What you can do is, well, this looks bullish because of trend line, because of L3, because of daily pivot point, rejection, historical buyers also, near-term history buyers, pivot point here. But guys, that is what I told you. You don't go long here, you go long here. A bit lower. You can go with a breakout trade. But today, everyone thought that it should go more to the upside, but well, price action never lies. This is resistance. So it rejected a bit now. So it's having like a retracement. So let's see. Yonad is asking, should you expect surprises from the Fed tonight trading dollar pairs? Not sure. I'm not sure that it will have a significant impact on price tonight. Not sure, really, I don't think so. Let's see what they're up to. This might cause a volatility, guys. This might cause a volatility. But the thing is, if it happens, I think the market is already prepared for some possible surprises or not. And if the price is still supporting the trend and the historical price action, what can be is that price reverses, get to our POC, and we go up. Of course, because of the unexpected event, because we don't know when it will happen, try to use a lower risk. Maybe an emergency meeting, yeah, but try to use a lower risk, definitely. Try to use a lower risk. That is my recommendation to you. Definitely lower risk. Now GBP dollar. GBP dollar. Well, same thing. It's ranging 43.40, 43.75, 42.80, 41.90, 41.65, 42.80. Well, a bit awkward price action on pound dollar. Now, if you zoom out, what do you see, guys? This is not a trend. This is a trend. You see, this is a trend. Now, this is not a trend. So I see possible two-way trading here. 43.40, possible sell. 41.90, possible buy. Where do you look for sell is exactly where it did in the past. Where do you look for a buy trade opportunity? Exactly where it did in the past. But you see, near term, past suggests buying here, here today. So it will be either, okay, so this is the zone 90, let's say. It can be, okay, like this. Strong buying here, breakout. Another strong buying here. Also close to H3 support. So it could be rejected from the zone. And 43.40, sorry guys, this is 43.40. Here, another rejection, another gap. You have a gap here. See the gap? Here. So historical strong selling from this point. Yeah, it might go for a break of the trend line here, if you think, but it's L3 confluence, it's X cross here. This is an X cross, you see. So it was not, in the history, it was not a big move to the downside. 43 pips only. I don't know. Well, maybe for a scalp trade it can be good, but not sure about some heavy breakout trading. What I look is to actually try at least to grab 30, 40 pips, or maybe 20 if the price does not listen to us. So sell here, buy there. Actually, this is also might be a resistance, but if it breaks on the next three tests, it should hit our POC. The trend line on the top here, but you see, this is a trend line, or if you think this one trend line here, Nathan, I don't know. It might be a good breakout, but another more like a scalp breakout here. See, I don't know. It doesn't. You can opt for a very short-term trade, more like a scalp breakout, trigger happy, because if it breaks H4, same as with euro dollar today. Euro dollar didn't have any. See, euro dollar. This was historical top, and the next level, important level, is 20 pips away. Same for pound dollar. It's more. It's 40 pips, but it's very close. So this is the resistance, but this is also the resistance. It needs to break 4 hour, yes, and then possibly towards this level here. Not a big fan of this setup, to be honest, because I don't like those range trades. I prefer either a good trend or good counter trend opportunity. But you never know. It might be good, because I always show euro dollar, pound dollar, and Australian dollar. And pound dollar is telling me this. Australian dollar uptrend, position buy 74.80, 74.45 stop, 76.80 possible target. Alternative sell 76.80, 77.30 stop, 74.80 TP. Breakout below 74.40, 5. Target price 7360. So be careful, guys. This is important, because if it breaks with below this price, well, we might hit this level. So let's give me a second. Just give me a few seconds. Okay. Australian dollar. You see, it's making like a head and shoulders. And all the unemployment, yes. So be careful, guys. Be careful about the news. Because unemployment, let me see when it's scheduled. Nathan, it's on Thursday, so you don't trade this setup on Thursday. This setup is valid for today, tomorrow, and maybe Wednesday. So, yes, not for, it's your time, Wednesday. But, okay, if this setup happens before important news, go for it and close the trade, manage the trade before the news. Because on my calendar, it's actually Thursday. I am GMT +2 at the point. Okay? I'm GMT +2, so you see here. Thursday. So, well, I wouldn't advise you that you trade this setup prior to that news. It needs to happen before it. So 474.80 is a buy trade. 76.80 is a sell. See a lot of historical buying here, a lot of. It's at L3 weekly pivot point, and below this level it should go down. Watch for this zone here if it breaks. So your first target could be like 30 pips for a breakout, and it's good for a breakout. And this is the final target. This looks like a potential head and shoulders in progress. See here, head and shoulders in progress. And sell is 76.80. So uptrend indeed here, but it shows potential head and shoulders. So where do we short it? Short it from the top, potential top of the right shoulder. So this zone here could be a good short trade. Okay, it can be a good short trade. Now dollar CAD is in downtrend, position sell. Let me see if I didn't. No, this was not. Yeah, this is it. Guys, this is the wrong slide. Let me see. I know that this is the wrong slide. So I'm not sure why it stayed here. I didn't delete it, obviously. I will delete it now. So we have New Zealand dollar and gold. We don't have dollar CAD for this week. Okay, so New Zealand dollar and gold. Okay. New Zealand dollar is in uptrend, 67.65. Buy trade. Yes, it stayed, Nathan, you're right. Stop loss 67.20, target 68.50, target 269.50. Okay. So this is New Zealand dollar. You see it's a bit of uptrend here. See uptrend, T89, a bit to the downside, but the price went up. So here, T89 here. Looks like it should go up to the upside. Yeah, very close to H4, so pay attention to H4 also. But for positional trades, 67.65, 67.20, 68.50. So 67.65. This is where I will buy if it goes there. Look at this. Triple top breakout and a lot of buying here. So at least it should give us 20-30 pip. And if you're lucky to have a good momentum, we can get even more. But because of these historical buyers, strong buyers here, I expect this level to be protected. So possible targets there. And a gold per request, I would look to sell. It's very close to resistance. Very close to resistance indeed. I will show you one more. Oh, this is not the gold. I meant this, very close to resistance. Look at this, guys. Yes, gold analysis, but guys, you know that I don't do gold analysis because I very rarely can give you the exact targets and stops. You need to use this as opinion now, really. I think that, look at this level. I will. this is also important level, because this is already happening, guys. This is already happening, rejection. So it might go up if it goes there, but look at this, very strong. A lot of selling here, a lot of selling here, a lot of selling here. Look at this selling here, guys. So this is it. The exact level for a sell. I mean, gold is volatile, so yes, very close to H5. So use this analysis to guide you, not for strict levels, just for as a guidance. Okay, stop loss is 120. Well, I don't do it often, but I think that stop loss should be placed above this level. So it's like 100. Let me see if I did it correctly. Yes, 1270.94, because if it goes above it, it could be a breakout. So 1271 could be a stop, adding a bit of the spread. And targets now, 1258 is the first target. So somewhere around this region, you see it's trying to break it, so it will be a retest possible if it breaks, if it rejects from this region. And if it goes below 1258 on a rejection, next target is 1235. This is next. Look, totally aligned with EMA 89. So I think that gold might turn bearish, but it could jump here and then down. Okay, this looks like a potential, like Adam and Adam here. You see, rejection, rejection. So it looks like irregular Adam and Adam, but it looks bullish, really. So if it goes here, we could try for a sell. We still have a couple more minutes, guys, for any questions. So if you want, I will roll the slides and you can ask me whatever you wish. And add a bit of pips for gold, because 1271 is exactly where price is just above the resistance. So you might add a couple of more pips. And place the questions. I will re-roll the slide. Australian dollar, New Zealand, and gold. Elmo ODN, Nathan Euro OD. Pay very special attention to equities, Elmo, if you are trading ODN. ASX 200 index, Australian index, has a strong correlation with ODN. Nikkei index also, DAX during London, SP 500 during New York session. ODN is one of the most correlated pairs to equities, and that is one of the reasons I'm fond of it. This is Adam and Adam here, leaned Adam and Adam. So what I think on ODN is that the price, if it breaks this top here, it should go towards this region. If it breaks it, it should go here. And then you might be looking for a sell trade. Because this, you see this level here, this is so-called block. Okay, so this was very short block here. See what happened. And look how EMA is aligned to it. So if it breaks this top, it could hit here, here, this region, and this, and it should be rejected for this, placing your stop loss just slightly above H4. So that is ODN, but at this point it looks like it might turn to the upside. EUR/AUD. Well, this is not head and shoulders. Look at this. This is W. This is like leaned Adam and Adam here because of the strong buying. See, strong buyers. W is different from Adam and Adam. W does not show legs, and Adam show legs. Okay. UROD, sure. Maria is saying, is there a video which can explain how to interpret it and trade with your Camarilla MACD indicator? No. No, that is the analysis I use. I have invented it, and I don't share Camarilla MACD for free. But for free, you have price action trading school. That is a concept that is more for trading than analysis. And some of the concepts from PNT method are incorporated into Camarilla, and all of the concepts from PNT are incorporated into price action trading school. So price action trading school is the way how to read the price, and it will be more than enough, believe me, if you are studying it very seriously. The question now is Euro-AUD. Euro-AUD ranging, Nathan. This is a range here. See? Ranging. See it flat EMA. 4-hour retracing. 1 hour ranging. Definitely ranging here. So what can happen is you go with correlation matrix. Here. Put like this. H1 200 bars. And look for euro dollar, euro AUD. Okay, do we have it here? Euro AUD here. Euro dollar, euro AUD plus 43. Well, this correlation is mostly they move the same direction, but not very strong. So whenever euro dollar goes up, euro AUD would follow, but not that precise. And AUD Swiss. Correlation. Let's see. Yes, here. Minus 40. So same, but vice versa. Same as with euro AUD, but vice versa. It's just opposite. So euro dollar up, AUD Swiss a bit more down. Look. And yes, it's in downtrend here. Another, you see, lean Adam and Adam, so it might spike towards previous order blocks here. You see. So watch for 72.95 if it breaks H3. Okay, watch for this level on AUD Swiss. Dollar CAD, dollar yen, Derek. And guys, we have only one more question left because we don't have the time. So dollar CAD, dollar yen. And if I can have a look at DAX. The advice. Okay. Okay, that will be it then. So dollar CAD and dollar yen. The reason I didn't put a new analysis on dollar CAD is because I want to see what will happen mostly on with oil, because lately the trend really follows up, but the problem is with dollar CAD, it's very reliable on oil. So if, as I said at the beginning, if oil goes up, okay, dollar CAD will go down. So you need to watch for oil news. Technically, it's sitting at very close to support. It is bearish technically. See, and you see a lot of rejections here. So pay attention to these levels possibly here On 4 hour, I don't see anything particular. Then it's close to L4, important support. No divergence yet. No divergence yet, Maria. No bullish divergence here. See, this is not divergence here. Okay, dollar yen. This is not. You mean this one? Yes, but it's already played out. You see, this divergence here already played out. See, it went up. Now it's just a historical divergence. So from this point, it might go up based on the history. But I won't be recommending just because we need to see a bit of action from oil. I need to see it. Because it goes 30 pips in profit and oil news come kick in and we are either at break even or I don't know. It's just not that important now. There are other pairs that are more important. And dollar yen. As I said on Friday, the 100.50 was POC for, not for trend trade, but for opposite trade. And what happened is the price rejected here, okay, here, and it went up. It's not a big, really, it's not a big, it was only 50 pip to the upside after I did the analysis. But that was, thanks Bob, thank you. Bob is saying hi, he needs to go. So guys, the analysis said it could reject from this point. Try to read it on Forex Street. And it did reject for 50 pips. But the problem is it didn't give me the price that I wanted. And the price that I wanted is here. This is the zone for me to sell. Now it's still going down. The price is below 108, so it's bearish. And the ultimate target for this move is weekly, I guess, 150. 105. This is the ultimate target. 105.44 here. But I would sell only higher. I would now sell probably, I don't know, the CMA is selling, but I would go higher. Maybe I would, because I don't know when BOJ can intervene. They don't like stronger yen, guys. Japan is not, it's not good for Japan to have a stronger yen. Stronger currency will hurt their exports and it will lower their corporate earnings. So BOJ might intervene, and next level where we could see for a possible sell is this one exactly here. I would prefer to sell it higher, not now. And the last one, the DEX, and okay, maybe you have some advice for DEX. Mathieu, about DEX, I'm currently developing a possibly good method to actually go with DEX. So we will see. It's different to price action. Actually, DEX is traded like mostly scalping trades because it's very fast. And at this point, it looks bullish. And at this point, but it's very close to resistance. So in order to, this is also inverted head and shoulders. So DEX looks bullish. So in order to actually go up, it needs to close 1 hour close above H3 or 4 hour close above H3 or 1 hour momentum. So it looks bullish from this perspective. See? Dollar yen Nikkei correlation matrix. Okay. Dollar yen correlation matrix. with Nikkei, sure. This is Nikkei. Okay, it's different. Let me see. The high, like this. You see the correlation, plus 82. It's very strong correlation, very, very strong. Dollar yen and Nikkei moves in the same direction. So that is correlation matrix here, plus 82. Extremely strong correlation. Mr. Gaspacho, if you want to get a correlation matrix, it's a part of Admiral Market Supreme Edition. If you're trading with Admiral Markets, you can have it for free. If you are only having a demo account, then you can use it for 30 days. So that's it. Guys, okay, I hope it helped. Let's see what the market will do. As always, I wish you to trade safe. I will come back with new analysis, new outlook. I might do, let's say, AUD Swiss, Swiss yen, pound AUD if I don't see anything good with the pairs that I show you. So guys, as always, pay close attention to tweets, pay very close attention to analysis, and as always, trade and stay safe. Cheers.